Hey everybody, it's Eric from Entrepreneurship Solutions back for another video, and today we are going to talk about life insurance for entrepreneurs. Life insurance for entrepreneurs and business owners, okay? Because the reality is, if you are not employing life insurance within your business, you are one, leaving your business exposed to risk, and two, you're leaving dollars on the table. But let's dive into it. Let me explain what I mean. So first, if we think about strategic planning for your business, we have to consider that at some point, you as the business owner are going to exit your business. Whether that's on your terms or on nature's terms, we don't know. But we should be prepared either way, right? So either you are going to sell the business or you're going to exit the business because of an untimely and unplanned event. And we're going to leave critical illness and disability off the table for now. We're only going to talk about life insurance, right? So you either you exit the business willingly on your terms, or you exit it unwillingly. In either case, you should be prepared for those and make sure that you and your family and your business profit from those events, okay? So let's start by identifying life insurance as a real need in your business. And this counts whether, you're a solopreneur and it's just you, or if it's a large corporation. The risk still exists. But for the purposes of this video and the purposes of the clients that I deal with, they're going to be smaller businesses, so we'll talk about that. And it doesn't matter if you're incorporated or not, the need still exists. And let me explain. Why are you in business? Why did you take the risk, take the plunge to go into business? First and foremost, it's likely to make money. Right? It's to provide for you and your family. And then we add on all of the good stuff of making the world a better place, doing the things that mean something to you and rejuvenate you and make you energized. But let's talk about providing for ourselves and our family, okay? And I need you to think about the end of life of your business. What happens if you're not there? Okay? So I'll use my own business, for example, Entrepreneurship Solutions. I co-own it with my friend Brandon. Brandon does a lot of the technical stuff and behind the scenes stuff, and I do the sales. The sales are what make the business money. If I am no longer around to do the sales, the business can't make money. I ask the question to you, how valuable is this business now if the only source of its income is now gone, right? Therefore, we need to protect the business. There is a legitimate need to protect the business because we have concentration risk. If I'm the only person who drives revenue, well, there's a huge risk if I can't do that. We call this key person insurance, right? And every business has this, whether you're the main operator in your business or if you have someone else who is one of the main drivers of revenue for your business. You have concentration risk in that one person, that one key person. If that one person were to suddenly pass away or become incapacitated, that leaves your business exposed, right? But we can fix this. We can use life insurance. So for example, for me in my business, we have a life insurance policy on me. If I were to pass away, then the corporation, because that's the owner of the policy, we use corporate dollars to pay for a corporate-owned policy where my life is the life insured. So the corporation, who's also the beneficiary, receives the death benefit tax-free. That money can be used a couple of different ways. For Brandon and I, we have a buy-sell agreement, which is another reason to get life insurance, especially if you have a partner. Instead of my shares of the company passing to my wife, and then Brandon now being in business with my wife, we have an agreement, and it's written down out by the lawyers, where Brandon will buy out my shares from my family, my wife. And then Brandon becomes 100% owner. And this does a couple things. One, it allows my family to get the money that it needs from the death benefit to keep going and prosper without me. Two, it saves the company from having a new owner that doesn't necessarily align with the business. That's not to say that my wife couldn't do it, but it's definitely not what she wants to do. And that's totally fine. And I don't think that's out of the norm for many people. But this is a way that we protect it. So myself, I'm being protected as a key person in the business. And we also have a life insurance policy on Brandon because there's a risk for me if he is no longer able to do all of the background work that he does, I need to hire someone else to do those things that he did so the business can continue prospering as it does. So we have life insurances on both of us. They're both corporately owned because there's a legitimate need and a legitimate risk there. Now, that's the morose and the negative way to look at why life insurance is important. Here's another perspective, right? Let's say that we get to the end of our time in our business and we want to sell it. Well, we want to sell that business for as much as possible because likely that is one of the streams of income that we are planning on for passive income time or retirement. Well, if you have specifically a whole life policy that has a cash surrender value in it, that is an asset on the books of the business. That is additional liquid capital that you can put into the sale of your business to generate a higher price, okay? Especially if it's corporately owned. And there are certain terms that you could do if you wanted to sell it, if you wanted to retain it, if you wanted to cash it out beforehand, you can certainly do that. But the point is, by having the right product, the right insurance product, at the time of sale of the business, it is going to add dollars to the sale price of your business. So if you don't at least cover the need that you have to cover the risk that your business is exposed to, you're not only leaving yourself exposed, but you're leaving dollars on the table. And this is not even talking about using the policy for all sorts of things that you could to help your business run while it's operating. This is just purely planning for the end. You're leaving dollars on the table. Okay, so let's talk about how do we use a properly structured life insurance policy as a financial tool. Well, if you've ever watched any of our videos, we talk a lot about a specially designed participating whole life policy. And this is exactly the type of policy that we use in Endurus because it provides the protection and it also provides an incredible financial tool. So how does it work? We design these policies so there is a base premium, a face value of death benefit. And it doesn't have to be extremely high. It depends on your business. When we were just starting out, we didn't have a massive need for life insurance coverage. But we also understood that we would likely grow into this and add more policies, which you can totally do in the later years of the company. Why did we do this? Well, we understood, like any business starting up, cash flow is going to be tight for the first couple of years until we're in that sustainable stage and our brand is recognized and people know what we do and they trust us. Cash flow is going to be tight. So it's a small policy. I believe the death benefit is $150,000. That is enough to, if Brandon wants to keep going, keep the business alive until he gets another producer or another salesperson, a replacement for me. If he doesn't want to keep the business alive, it's a nice payout for my family. Now I have additional life insurance outside of the business, so that side's covered. But from a business perspective, it's a small policy. But we've designed it to have flexible premium, an accelerator deposit option, or otherwise known as paid up additions. Why did we do this? Well, because we understand the power that this financial tool has. Here's how we think about money in our business. Most businesses, you have revenue minus expenses equals profit. Well, those expenses, a lot of businesses see this as, this is our tax write-off. This is a way to use our money and minimize the amount of tax that we have to pay. Well, they've lost all of the opportunity of that money. The lost opportunity cost is huge. The way we see money is we want to run it through our policy first. We would like to pay all of our expenses from policy loans and then take our operating expense budget and make that our premium payments for the year. Why? Well, in a specially designed, not even a specially designed, in any whole life policy, the cash value, which is the equity in your policy, must equal the death benefit at the life insurer's age 100. Why is that important? Well, it means that every single day, the equity in that policy is going to increase. Every single day, the equity in that policy is going to increase. Okay? That's a contractual guarantee. The way we design them is with the accelerated deposit option or the paid up additions, we allow for additional premium payments to go in, which buy additional death benefit. What this does is it pushes the death benefit higher and higher and higher and higher, but the contractual guarantee of the equity or the cash value equaling the death benefit does not change. Therefore, the growth of that cash value must increase in order to catch up. What this does is it allows for your money, because each time you pay premium, a portion of that is put aside as equity. And then when we get the dividends, because it's a participating policy, we use those to buy additional death benefit. It allows for our money to compound and grow uninterrupted. Compound and grow uninterrupted every single day. This is a massive, massive, massive asset for a business. Okay, imagine you had an employee, works 24/7. It is always making you money. Now, in the beginning, it's not making large amounts of money because it's just learning, it's just figuring out the business, but it's never going to give you a negative return. And each day, it's actually going to get more efficient. This worker is going to get better at its job, and it's going to make you more money every single day. And on top of that, because this employee is the best friend, the best person ever, anytime you need access to money, it'll pay you. It'll say, no problem. Here's a loan. I'll collect interest on the loan, but don't worry about it. You pay it back whenever you get the chance. And each time you pay this employee, they're going to take that money and they're going to put a bigger output on the other side. So later on, it's 10 years in, this employee has been working 10 years, it's making you money every single day. You pay this employee $50,000 a year, and 10 years down the road, they're going to give you $100 in revenue, or $100,000 in revenue, a 2-to-1 ratio, and they're only going to get more efficient over time. This is what a strategic life insurance asset, a participating policy designed the specific way, will do for your business. Every single year, it will give you access to liquid capital, and it will grow the money that you put towards it, the money that you invest. And I use that term strategically because we don't see life insurance premium as an expense. We see it as an investment in our future. Okay? So any dollar that you invest in this asset is going to give you a return greater than 1. Let's talk a bit about the benefits of taking these loans. So if you're a business owner, you've definitely taken a bank loan, and you definitely understand the position of power that the lender has over you, right? So the golden rule is those who own the gold make the rules. You are at the mercy of their whims. If they decide you have 2 years to pay this off, you have 2 years to pay it off. If you miss payments, if you fall behind, they're going to take the asset that was collateralized against it. You are not in a position of power, therefore you don't get to decide anything. And that's a stressful position to be in. It's a necessary position to be in. Businesses require capital to run, but it's a stressful position to be in. Let's look at the flip side. If we are leveraging an asset that we own and we control, which is this strategic life insurance asset, and we leverage against it to get the money that we need, now we're in complete control, right? So for example, if Endurus Wealth Solutions in a couple of years decides we want a storefront and we want to build this building, if we have enough capital in our own internal systems, we're going to borrow from our own internal assets to build that building. Yes, there's interest. Capital always comes at a cost. But who is going to benefit from this interest? If this interest is paid towards the life carrier, and we are a co-owner of the life carrier, and that life carrier pays us dividends on the divisible surplus that it generates from loans like ours, we are essentially making money from ourselves. All the while our policy is growing every single day, making us more money every single day, compounding uninterrupted every single day. So that's the money side of it. Now let's talk about the control side. We are in complete control of the repayment of that loan. We can pay it back whenever we want, no penalties. Pay it back in a day, no penalties. Pay it back in 10 years, no penalties. We have to understand that there's interest, and we're going to pay interest, but we're in complete control of the repayment of that loan. Better yet, because it acts like a line of credit, when we repay the loan, we have access to the same dollars to put back into our business to do the next big thing that we want to do. That's the power of control. Now, this is just scratching the surface, and what this strategy could do for your business is amazing. But really what you need to do is sit down with an advisor and go through the strategy for your business. How is it going to work for your business? What are your business goals? What are its capitalization needs? What is the risk it's exposed to? And these will all determine how much money you put in. Maybe it starts with a small amount because you're a brand new business like we did. Or maybe you're an established business and you just can't accept the risk anymore that exists within that key person or the buy-sell agreement. And you need to take care of it. But you also have the need to finance things in the future. Well, we can combine those two things. We can synchronize the protection with the financial tool. So your next step is to reach out. Let's dive into it. Let's build your strategic plan. Let's get you covered and get you on your way to having an incredible financial asset for your business that you will never regret. Thanks so much. I hope you learned something today, and we'll see you in the next one. See you later.